All right, Bitcoin is hanging on by an absolute thread right now. The 8:30 a.m. jobs report window just passed, and it came with a twist nobody saw coming. We've just seen a massive price swing in the last hour, and that critical support level, well, it's under some serious pressure. This is a red alert situation as we head into the weekend.
And that's the live price right now, $65,296. The market tried to pop, but it just got slammed right back down. If you're watching this chart with me, you know this volatility is just absolutely brutal. The real battle is happening as we speak.
Look, let's just be direct. If you bought that dip yesterday thinking the worst was over, you are sweating bullets right now. The weekend is just hours away, liquidity is about to completely vanish, and you need a solid plan for the next 48 hours. I'm going to show you exactly what the data says and the key levels you have to be watching.
Okay, let's get right to the heart of today's chaos. Everybody was waiting for that jobs data to give us some kind of direction, right? Well, the market got hit with a curveball that nobody was prepared for.
Here's the shocker. Because of a partial federal government shutdown, the Bureau of Labor Statistics has officially delayed the non-farm payrolls report. The data? It's not coming. The market is completely flying blind. Without this key piece of economic data, big money has no idea what the Fed's next move is. And when institutions are uncertain, what do? They sell first and ask questions later. And this is the result. The Crypto Fear and Greed Index has completely cratered. We're at a reading of just 9. That is deep into extreme fear. This is actually the lowest reading we've had since all the way back in June of 2022. The market is in a state of absolute, total panic. And check out this number on the screen, 15.64. That's Bitcoin's Daily Relative Strength Index, the RSI. To put this in perspective, we are now in more deeply oversold territory than we were during the March 2020 COVID crash. Just let that sink in for a second. The market is pricing in a level of fear that is even worse than one of the biggest black swan events in modern history. So, while all this is happening, Wall Street is closing up shop for the week. What are the big players doing? Are they buying up all this fear? The answer is a hard no. In fact, they are leading the stampede for the exits. This was the net outflow from the spot Bitcoin ETFs this past Wednesday alone. Over $500 million gone, pulled in a single day. And just to be clear, this wasn't some one-off event. It was the second straight day of heavy, and I mean heavy, withdrawals from these institutional products.
And this chart really tells the story of who's leading the selling. BlackRock's IBIT fund. They saw over $373 million in outflows all by themselves. This is not just scared retail traders panicking. This is the biggest money in the world hitting the sell button and pushing this move down. They are not treating this like a dip you should be buying.
So that brings us to the fight happening right now. The bulls are desperately trying to hold the line. Their only mission today is to get back above $67,000 to try and save this weekly candle. But the bears, they smell blood in the water. They see the ETF outflows, they see the data vacuum, and they are pushing hard to flush the price down and test that major support at $64,000.
Now, we have to talk about the weekend. You cannot underestimate the danger of the next 48 hours. With all the institutional desks closed, the market gets really thin, and low liquidity means volatility gets cranked up to 11. Tiny orders can cause massive price swings.
So these are the only numbers that matter this weekend. $64,000. That's the absolute line in the sand we have to hold on the weekly chart. If that level breaks, the next stop is critical support down at $62,000. Now, on the upside, the bulls have to get back above $67,000 to show any strength. But the most important price of all is wherever we land for that Sunday weekly close. And make no mistake about it, if that weekly candle closes below $65,000 on Sunday night, the stage is set for a potential gap down. That's when the CME futures market opens back up and the big traders react to everything that happened over the weekend. A weak close means the sellers were in control the whole time. Okay, so with all of this fear, this institutional selling, all this chaos, is there any glimmer of hope? Well, this is where we have to start thinking like a contrarian, because extreme fear, when it hits this boiling point, can sometimes be the most powerful signal that a bottom is getting close.
You know, crypto analyst Jamie Kutz over at Real Vision put it perfectly. He's pointing out that we're seeing the classic signs of a final seller washout, what we call capitulation. It's like the market is screaming that the elastic band has been stretched way too far. When fear gets this high, it usually means the last of the panic sellers are finally being forced out of their positions. And just so we're all on the same page, capitulation is that moment of maximum pain. It's when investors finally just throw in the towel, they give up, and they sell everything just to make the bleeding stop. But historically, these moments of peak pessimism, they're not just the bottom. They're often where the smartest money starts building their next big positions.
So let's put all this together into a real, actionable game plan for this crazy weekend. We've got extreme fear, we've got institutions selling, and we have a major data blackout. Here's how I see this plan out. There are two really clear paths from here. The bullish scenario, scenario A, is that we somehow hold 64,000 as support and manage to crawl our way back towards 67,000, locking in a weekly close above 65. The bearish path, scenario B, is that we break 64,000 and that triggers a cascade of liquidations all the way down into that $60,000 to $62,000 zone. Now, my personal strategy here is simple: patience. I'm not buying here, and I'm not shorting into this chaos. The risk to reward just isn't clear enough. I'm sitting on the sidelines, and I'm waiting to see if we get that final capitulation flush down to the $60,000 or $62,000 area. For me, that would be a much clearer signal to act on. And one last warning for the weekend: be very careful of the Sunday scam pump. This tends to happen in those low liquidity hours right before the weekly close. You'll see a sudden, sharp pump on almost no volume that's designed to trap late buyers right before a reversal. Don't fall for it. So, please remember this: the bottom is not confirmed, not even close. With the jobs report still missing in action and big institutional money actively pulling out, the conditions are perfect for even more volatility. Do not get complacent.
This weekend is going to define the rest of the month. If we break that critical $64,000 support level, I will post an emergency update Sunday night. Make sure you're subscribed with notifications turned on so you don't get caught off guard. Please trade safe.